A Business Incorporation Guide/Create a Corporation. Chapter 1. Incorporating a Business. Incorporating a business. If you are the owner-manager of a small business, you may have been wondering about the advisability of incorporating your business, particularly if you are seeking equity capital. There are several reasons to incorporate. The most common ones are: limited liability. People can't take away your personal assets if you do business legally. Tax advantages if you are wise and have a good accountant. It is easy to add new owners/shareholders/investors. A corporate structure is more likely to attract investors than other forms of business. Most businesses start out as either sole proprietorships or partnerships. Then when they grow some, their accountants usually step in and advise them to incorporate. Laws governing the procedure for obtaining a corporate charter vary among states. Detailed information about the requirements of your state can be obtained from the secretary or other official designated to supervise the granting of corporate charters. Generally, the first step in the required procedure is preparation, by the incorporators, of a certificate of incorporation. Most states used to require that the certificate be prepared by 3 or more legally qualified persons, but the modern trend is to require only one incorporator. An incorporator may, but not necessarily must, be an individual who will ultimately own stock in the corporation. For purposes of expediting the filing of articles, dummy incorporators are often employed. These dummy incorporators are usually associated with a company that performs this service or with an attorney for the organizers. They typically elect their successors and resign at the meeting of the incorporators. If the designated state official determines that the name of the proposed corporation is satisfactory, that the certificate contains the necessary information and has been properly executed, and that there is nothing in the certificate or the corporation's proposed activities that violate state law or public policy, the charter will be issued. Next, the stockholders must meet to complete the incorporation process. This meeting is extremely important. It is usually conducted by an attorney or someone familiar with corporate organizational procedure. In the meeting, the corporate bylaws are adopted and a board of directors is elected. This board of directors in turn will elect the officers who actually will have charge of the operations of the corporation, for example, the president, secretary, and treasurer. In small corporations, members of the board of directors frequently are elected as officers of the corporation. The bylaws of the corporation may repeat some of the provisions of the charter and state statute, but usually cover such items as the follows: 1. Location of the principal office and other offices of the corporation. 2. Time, place, and required notice of annual and special meetings of stockholders. Also the necessary quorum and voting privileges of the stockholders. 3. Number of directors, their compensation, their term of office, the method of electing them and the method of creating or filling vacancies in the board of directors. 4. Time and place of the regular and special directors' meetings, as well as the notice and quorum requirements. 5. Method of selecting officers, their titles, duties, terms of office and salaries. 6. Issuance and form of stock certificates, their transfers, and their control in the company books. 7. Dividends, when and by whom they may be declared. 8. The fiscal year, the corporate seal, the authority to sign checks and the preparation of annual statement. 9. Procedure for amending the bylaws. At the time of the first meeting of the corporate board of directors and prior to issuance of any shares, you might consider adoption of a plan under a section of the Internal Revenue Code, IRC 1244, that grants ordinary rather than capital treatment of losses on certain small business stock. After the paperwork is approved, you have the first meeting of the incorporators and the initial board of directors where you elect the officers and board of directors. From then, you call meetings to discuss and resolve regular corporate business in the form of minutes, ideas, suggestions. They are read, discussed, and voted on, then signed at the end of the meeting. The agenda for a typical meeting is as follows. Open the meeting. Note the persons present. Read minutes, discuss and vote. Adjournment. After the organizational meeting, the relevant information should be recorded in your minutes book, which is a corporate records book with all your important corporate papers in it. You have to get a corporate bank account. Bring your taxpayer identification number, business license, and corporate papers to the bank to prove to them that you're a bona fide business. Depending on the state or municipality and the type of business, you might have to buy a business license for the privilege of doing business, essentially, another way for the government to make money. Among the requirements of qualification as Section 1224 stock are: 1. The stock must be common stock. 2. The stock must be issued by the corporation for money or other property pursuant to a written plan containing several limitations. 3. The amount of contribution received for the stock and equity capital of the corporation must not exceed maximum dollar limits. If you plan to transfer property to a corporation in exchange for stock, you should realize that such a transfer is a taxable transaction unless the transfer complies with the provisions of IRC Section 351. If your business is at present a sole proprietorship or partnership, you will need to secure a new taxpayer identification number and unemployment insurance account. You should find out in advance whether present licenses and leases will be transferable to the new corporate entity. It's cheapest to incorporate in your own home state. Incorporating in your own state is generally several $100s including state fees. If you incorporate in a state other than your own and do business in your home state, you must then qualify or file in your home state in order to legally do business there. Some corporations choose to incorporate in states like Delaware or Nevada because they require less information than other states do, so there's added privacy there. Many major corporations are incorporated in Delaware. Each state has its own statutes that regulate the formation and governing of corporations and limited liability companies called the Business Corporation Act, BCA, or Business Corporation Law, BCL, which are usually based on and similar to the revised Model Business Corporation Act/REMCA. Section 5.01 of the REMCA says that each corporation must continuously maintain 1. A registered office, an address where all legal notices can be sent, and 2. A registered agent. For example, your attorney's office can be your official address and your attorney the registered agent. Failure to maintain a registered agent results in the loss of good standing of the corporation with the state, which firstly means sanctions and fines, and if not resolved, ultimately, the business could lose its incorporation status. Almost every state has such a provision in its own Business Corporation Act, which requires a registered agent or office for every corporation, LLC, or limited partnership that does business in its state. Its purpose is to ensure that each company has an office where it can be located and a person at that office can be served legal paperwork. According to state statutes, there are a minimum number of directors you must have. In most states, it's 1 director. In others, it's 3 directors. Corporate paperwork. Your first official act is to file a charter or a certificate of incorporation with the state. Some states may have specific forms and certain requirements, but generally, you can type it out on a sheet of white paper and have it signed before a notary public. Get a sample form from the State Office of the Secretary of State to use as a guide. Some states may also require that you file with the city or county where you live. Many states have a standard certificate of incorporation form which may be used by small businesses. Copies of this form may be obtained from the designated state official who grants charters and, in some states, from local stationery stores as well. The following information is usually required. 1. The corporate name of the company. Legal requirements generally are that the name chosen must not be so similar to the name of any other corporation authorized to do business in the state as to lead to confusion, and that the name chosen must not be deceptive so as to mislead the public. In order to be sure that the name you select is suitable, check out the availability of the name through the designated state official in each state in which you intend to do business before drawing up a certificate of incorporation. This check can be made through a service company. In some states, there is a procedure for reserving a name. 2. Purposes for which corporation is formed. Several states permit very broad language, such as the purpose of the corporation is to engage in any lawful act or activity for which corporations may be organized. However, most states require more specific language in setting forth the purposes of the corporation. Even where state law does not require it, the better practice is to employ a specific object clause which spells out in broad descriptive terms the projected business enterprise, at the same time taking care to allow for the possibility of territorial, market or product expansion. In other words, the language should be broad enough to allow for expansion and yet specific enough to convey a clear idea of the projected enterprise. The use of a specific object clause, even where not required by state law, is advisable for several reasons. It will convey to financial institutions a clearer picture of the corporate enterprise and will prevent problems in qualifying the corporation to do business in other jurisdictions. Reference books or certificates of existing corporations can provide examples of such clauses. 3. Length of time for which the corporation is being formed. This may be a period of years or may be perpetual. 4. Names and addresses of incorporators. In certain states, one or more of the incorporators is required to be a resident of the state within which the corporation is being organized. 5. Location of the registered office of the corporation in the state of incorporation. If you decide to obtain your charter from another state, you will be required to have an office there. However, instead of establishing an office, you may appoint an agent in that state to act for you. The agent will be required only to represent the corporation, to maintain a duplicate list of stockholders and to receive or reply to suits brought against the corporation in the state of incorporation. 6. Maximum amount and type of capital stock which the corporation wishes authorization to issue. The proposed capital structure of the corporation should be set forth, including the number and classification of shares and the rights, preferences, and limitations of each class of shares. 7. Capital required at time of incorporation. Some states require that a specified percentage of the par value of the capital stock be paid in cash and banked to the credit of the corporation before the certificate of incorporation is submitted to the designated state official for approval. 8. Provisions for preemptive rights, if any, to be granted to the stockholders and restrictions, if any, on the transfer of shares. 9. Provisions for regulation of the internal affairs of the corporation. 10. Names and addresses of persons who will serve as directors until the first meeting of stockholders or until their successors are elected and quality. 11. The right to amend, alter, or repeal any provisions contained in the certificate of incorporation. This right is generally statutory, reserved to a majority or 2/3 of the stockholders. Still, it is customary to make it clear in the certificate. Send this to the Office of Corporations along with the filing fee, around $100. If it's incomplete, they will send it back and ask you to amend it. If the papers are in order, the secretary will file the papers and issue you a receipt. A stockholders' agreement is a document that details the relationships between the stockholders and the board of directors and corporate officers. It is modified as the corporation grows. It will eventually be filed with the SEC when the company goes public, offering to sell its shares to the general public. The Nevada Corporation. A corporation is a business entity that operates on the laws of the specific state where it is registered in the United States. Every state has different laws regarding corporations. Some states have more lenient laws than others, like Nevada, Delaware, and Wyoming. These are the states many companies go to incorporate, even though a large part of their operations are conducted in other states. The only rule in this case is that they must also register in their home state as a foreign corporation. Nevada has created an atmosphere where incorporating is encouraged because it's the best deal in the country as far as incorporating goes for the business person. Here are some of its advantages. One person can form a corporation as opposed to other states which require 3 or more people. They have low annual maintenance fees. Case law in Nevada makes it hard to prove that an individual mixes his personal assets with the operation of his corporation. It's difficult for prosecutors to pierce the corporate veil. Stockholders, directors, and officers do not have to be American citizens, which makes it easy for foreigners to set up a corporation. There is no requirement for officers, directors, or shareholders to live in Nevada. There is no requirement for officers, directors, or shareholders to hold meetings in Nevada. There is no state tax. This means no state income tax, no state corporate taxes, no franchise tax or no tax on corporate shares. Even Delaware taxes corporate profits. Delaware has a franchise tax. Nevada doesn't. Nevada corporations have better legal protection against lawsuits than corporations in any other state. Nevada has a shorter statute of limitations than other states do. The directors of corporations can issue stock for capital, services, personal property, or real estate in a value which they determine. It's up to investors in the marketplace to decide whether or not they will buy shares in the corporation. The names of officers and directors are in the public record, but this is it. Shareholder names are not public record. No other information about the corporation is in the public record, not its business plan, its listing of assets or minutes of meetings. The state of Nevada doesn't readily give up its information to the IRS without proof of criminal activity. They protect the information they have on their incorporators unless the IRS can painstakingly prove this corporation is involved in illegal activity. The state of Nevada has no formal information sharing agreement with the IRS. Corporations have the option to issue bearer shares to raise investment money or as an incentive to employees. Because Nevada is such a popular place to incorporate, many consulting companies have been set up that do all the paperwork for you for a fee, and on top of that you pay the government licensing fee. 24HOURNEVADACORPORATIONS.com bossoffice.com corp95.com corporate.com/incorporate-nevada.hdm easyarticles.com/comment.php Nevada-incorporation &ID =1275883 form-a-corp.com/Nevada free2incorporate.com howtoincorporateinevada.com inkfile.com inknow.com/Nevada incorporatefast.com incorporateonsite.com/Nevada incorporation-center.com/Nevada.php incorporationchoice.com/Nevada-incorporation.html incorporation-information.net inkparadise.com instacorp.com carltonmanagement.com laughlinusa.com legalzoom.com/incorporate/nevada-incorporation.html living-trusts.net/nevada-incorporation.htm multiplestreamsofincome.com keyword Nevada mycorporation.com myllc.com mynewcompany.com nchinc.com nchinc.com 877 Gonveda nchinc.info nevada.edu/gafnig/nevada-incorporation nevada.org nevada123.com nevada-business-incorporation.com nevadacore.com nevadafirst.com nevadaincorporate.com nevadaincorporation.org nevadaincorporationblog.com nevada-incorporations.com nevadaintercorp.com nevcorp.com nvinc.com nv-inc.com nvinc.com 888-627-7007 pondered.org/Nevada_incorporation.html quickmba.com/law/corporation/Nevada thenevadacompany.com val-u-corp.com Nevada Corporate HQ 800-398-1077 Nevada Corporate Planners 888-627-7007 Where do you incorporate? The state laws for incorporation differ in every state. Delaware, Nevada, and Wyoming have the most lenient laws, so that's where many companies that do business beyond their home state go to get incorporated. If you operate in one state only, the simplest way is to incorporate in your home state. If you do business beyond your home state and either nationally or internationally, you could decide, rather than registering it in your home state, you will incorporate in another state. This is called either an out-of-state corporation or a foreign corporation, and you still must register in your home state as a foreign corporation over and above incorporating in that other state. Most large corporations incorporate in Delaware. The smaller ones incorporate in either Nevada or Wyoming. Offshore incorporation. OCRA.com offers corporate, trust, and administration services to help clients set up international and offshore companies. CAN-OFFSHORE.com/offshore company incorporation. CHESTERFIELD-OFFSHORE.com. ExecutiveWorldwide.com. Incorporation.per.sg, Singapore Incorporation. S5i.com. Offshorecorporation.com. Chapter 2. Corporation Info. Corporations 1. Corporations were invented to get great ideas out into the public realm and make money in the process. The one defining feature of a corporation that separates it from partnerships and sole proprietorships is that the corporation is a separate legal entity, which means that the owners are personally not liable for things that happen in it unless they do something illegal. They are responsible as business owners in a business sense, but unlike partnerships and sole proprietorships, they can't be sued for their personal property. Think of a corporation as a separate legal business entity formed under procedures set up by state law. A corporation is much like a person in spirit. It can own, buy or sell property, enter into business contracts, borrow money, and raise capital. A corporation is not run by an individual. It is governed by the board of directors, who are elected by the shareholders. These directors appoint the upper management officers such as president and chief financial officer to run the corporation. The corporation pays corporate taxes, except in Nevada where there are no corporate taxes, as opposed to the other two types where the individuals pay business taxes through their personal income tax returns. The owners/stockholders have the luxury of liability protection, that is, they are not personally liable for the regular business debts of the corporation, while with sole proprietors and partnerships, the owners are personally liable for all business debts. This liability protection only works for debts incurred in the normal course of business. If the corporation is involved with some kind of fraud, negligence, or misrepresentation and is sued as a result of this, the owners will be sued as well personally on top of the suit against the corporation. A brief summary of corporation factors are as follows. 1. Corporations are regulated by state laws. Every state has an office of state/corporations where you go to file an application, pay a fee and get incorporated. 2. It is a legal entity distinct from the people who own shares in it and run it. 3. The shareholders have no liability for the debts of the corporation. 4. A board of directors, appointed by the shareholders, run the corporation. 5. A corporation is not limited time-wise. It can go on in perpetuity if desired. 6. In most states, there can be as little as one shareholder who also doubles as the director, or there can be as many shareholders as you want. Corporations are required by law to follow a strict set of rules depending on the state where they're incorporated, generally things like appointing officers, a board of directors, holding board of director meetings, keeping records of the minutes of meetings, keeping a certain reserve of liquid money around. Many other rules. If the owners of the corporation do not follow these rules, most courts, in light of the modern climate against corporate heads, will hold the owners personally liable as well as corporately liable. This only applies to the corporate owners found guilty of wrongdoing. If you're not doing anything wrong, the courts can trash the corporation but can't go after your personal assets. Some other advantages of corporations are as follows. A general lower tax rate than individual tax rates. Employees can defer taxable income in corporate retirement plans. Employees can be given shares, thus directly participating in a corporation's growth and profits, which is a great incentive to motivate workers. There are many tax deductions to take. An individual can form several corporations, thus reducing his taxable income. LLCs, limited partnerships, trusts, etc. can own corporations. There are tax-deductible fringe benefits such as driving a corporate car, taking a corporate business trip, etc. You can donate corporate shares and take the deductible charitable contribution on your taxes. Business liabilities are borne by the corporation as opposed to the individual members personally. The shareholders' liabilities are limited to their investments in the corporation and their profits, i.e. there are any. Corporations file annual tax returns and pay taxes on their profits as a business, and the individuals file their own personal tax returns too. With a subchapter S corporation, the shareholders have the benefit of the corporation's limited liability status, but for the purpose of taxes, they are treated as partners and fill out only personal tax returns. A corporation is formed by filing an Articles of Incorporation document with the State Office of Corporations. It is governed by its own bylaws. The officers of the corporation run the business subject to the approval or disapproval by the Board of Directors. The Board of Directors answers to the shareholders, who generally have an annual meeting to review the Board of Directors. Corporations too. Most people associate the concept of corporation with a big, multinational company probably traded on the stock exchange with many employees and a group of anonymous executives in pinstripe suits sitting in a big office somewhere pulling the strings. In actuality, a corporation could be a small business with only one stockholder/owner, or it could be a conglomerate giant like AT&T with several 100,000 stockholders who are, essentially, its owners. Legally defined, a corporation is a legal business established under the authority of the state with the power to make contracts, transact business, own and convey property, and take legal action or be sued in its own name. Black's Law Dictionary defines the corporation as follows: an artificial person or legal entity created by or under authority of the laws of a state or nation, composed, in some rare instances, of a single person and his successors, being the incumbents of a particular office, but ordinarily consisting of an association of numerous individuals, who subsist as a body politic under a special denomination, which is regarded in law as having a personality and existence distinct from that of its several members, and which is by the same authority, vested with the capacity of continuous succession, irrespective of changes in its membership, either in perpetuity or for a limited term of years, and of acting as a unit or single individual in matters relating to the common purpose of the association, within the scope of the powers and authorities conferred upon such bodies by law. If a corporation does business out of state, most states will require that that corporation register with the Secretary of State as a foreign corporation. A corporation is a legal business entity all unto itself. Most small corporations have a few owners who make decisions together as a team, while larger corporations have a chairman and a board of directors who are charged with its management for all the stockholders who are each part owners, the share dependent on how much stock they own. Corporations are made up of stockholders who own the company. The company is created by one or several like-minded business people who get together, legally form it, then select the managing executives, corporate officers, and the board of directors. The founders usually become corporate officers and board members and hire other people to fulfill these functions too. Legally, a corporation is a legal category of business with bylaws, stockholders, officers, and a board of directors. Earnings are taxed in the corporation as a business, then taxed again as personal income when they are paid to stockholders in the form of dividends. Unlike sole proprietorships and partnerships, a corporation hires its owners who are employees on the payroll with regular payroll deductions. For tax purposes, there are two different types of corporations. A regular, for-profit corporation is called a C corporation. The C stands for Subchapter C of the Internal Revenue Code. The regular or C corporation pays corporate income taxes on its profits, and in addition, the owners who are employees and other stockholders and employees are taxed on the wages, dividends, and capital gains they get from the company. Money is withheld from their paychecks and dividends, and they get a W-2 statement in order to fill out their taxes. This is called double taxation, meaning that profits are taxed twice, once at the corporate level then at the dividend level in the tax returns of shareholders. One way around this is to make the salaries of the owners high enough within reasonable amounts such that it eats away any profit the corporation may have earned. This is a legal method you could consult with your accountant about. Regular C corporations file Form 1120 or 1120A. An S corporation or subchapter S corporation is the same as a C corporation except that it is treated differently for tax purposes. Small or start-up business often prefer the S corporation category. They have the same limited liability as a C corporation, but they do not pay income tax. They have what is called pass-through taxation. They are taxed like sole proprietorships and partnerships, directly through the personal income taxes of the owners. The owners pay all the taxes, but some of the taxes are paid on their wages as employees of the corporation and some paid as taxes on corporate profits. S corporations file Form 1120s. Shareholders get a copy of Form K1 which lists their share of corporate profits, which they figure into their personal TAS return on Form 1040, Schedule E. Forming a corporation involves taking your assets as a company, transforming them into stocks and filing with your Secretary of State's Corporation Office for incorporation. The typical new corporation will be a small company owned by a few people who have invested their own money into the venture, and if they're good at what they do, they will grow to become large publicly traded corporations. Probably the greatest advantage of incorporating is that a company gains the ability to sell stock to raise investment capital. A corporation can go on ad infinitum, whereas the life of a sole proprietorship or partnership is limited to the lives of the people who run them. The act of incorporating makes a company feel more professional and legitimate. Public corporations, corporations which sell stocks/shares to the public, are managed by a stockholder-elected board of directors and an appointed slate of corporate officers. The management group is voted in or out annually at the stockholders' meeting. When directors and corporate officers act within the bounds of the law, they are immune by law from liability to the shareholders and the public, but when they break the law through willful negligence and fraud, not only can they be liable personally, which means a court will take their personal assets away to pay the bills, but they can also spend time in jail. Shareholders have no liability in company debts beyond the shares they own. In the event of bankruptcy, there is no liability assumed by the shareholders. However, shareholders can elect to wind up the affairs of a corporation, dissolve the company and distribute the assets. If they do this, they will then become liable for any unpaid liabilities of the corporation. The disadvantages of corporations are firstly loss of control. You give over your ownership to the stockholders who control the major decisions of the company by voting on them. There is double taxation. The profits received by the corporation are taxed and the dividends received by the stockholders are also taxed. Compulsory governmental filings in the form of extensive quarterly and annual reports make all corporation open books. There is no privacy. The work and costs to incorporate are significant. Corporations 3. Although corporations are creatures of the states, how they are taxed is determined both by the IRS and by the states. The IRS provides several different tax categories for corporations. Corporations have tax benefits that can be more advantageous than a proprietorship, but they also have strict record-keeping requirements. As a rule of thumb, a business should be incorporated if it has annual sales in excess of $250,000. It is against the law in most states to use the abbreviation Inc. unless the business is incorporated. With a corporation, 2 income tax forms are filed, one for the individual and one for the company. An advantage is simply that you appear more professional if you are incorporated. The disadvantages are, first, that since the charter must be approved by the state, it is more closely regulated than other forms of business. It is more expensive to set up than either a sole propriety or partnership, and there is double taxation, meaning that the corporation pays corporate taxes on its profits and then the individual owners have to pay personal income taxes on the income or dividends they get from the corporation. Corporations must divide their ownership into shares or stocks. If you're the sole owner, you get 100% of the shares. If there are several partners, you divide the shares amongst yourselves. There may be two classes of stock, common and preferred. Preferred stock is generally non-voting stock issued to investors and has a higher value or priority over common stock, meaning it pays out first in case of a financial crisis. Common stock is the voting stock, and these stockholders annually elect the board directors and the corporate officers who will manage the day-to-day business affairs of the corporation under the guidance of the board of directors. The board members and the corporate officers have immunity from liability unless they do fraudulent acts or commit negligence in the course of managing the corporation's business. Shares can only be issued in exchange for valid consideration, that is, that they have to be represented by something materially substantial within the corporation. Shares just can't be goodwill notes written up on paper which offer you faith in the future earnings of the company, they have to be represented by something. The stock can either be all common stock, meaning that every share has equal value, or you can also add the higher quality of class, preferred stocks, to the formula, which are special stocks issued to the owners and high executives or whomever, giving them a cut of the profits before the balance is dispersed among the common stock. In most cases, preferred stockholders get paid first in the event the company goes bankrupt or closes down, and they generally get a regular dividend which is higher than that of common stockholders. They might also have other special rights, such as the exclusive right to elect X number of directors or something else important in the operation of the company. It can get complicated. Small corporations usually just deal in common stock. As a small corporation, you should determine at the outset how many shares you will issue and the amount for each share. For starting purposes, a few hundred shares is often enough. Many states base their initial filing fees and taxes on the number of shares, so the lower the better. Let's say you're the sole owner of a corporation and you're starting it up with $10,000 capital. You could decide to issue 200 shares at a value of $50 each. A loophole to avoid paying taxes is, instead of putting all your upfront capital into shares, you only put half of it into shares and you loan the corporation the other half. Then later, when the loan is paid back to you, it is not considered a dividend or profit as it would have been had it been put into shares, therefore, you don't have to pay income taxes on it. Most small corporations with a few shareholders/owners operate like a partnership. If you're starting a corporation with a few other people, you should consider a buy and sell agreement with the other members to give the group the option of buying out an individual's shares should he decide to leave before he offers it to outside interests. You could also put in a stipulation that if a member dies, you, as a group, can buy his share from his estate. You might consider taking out some kind of group life insurance policy to protect against financial loss should one of your business partners dies. You will have to choose a name unlike a name that already exists, and usually with the words either corporation or incorporated/Inc. in the title. Corporations. 4. The State Office of Corporations, aka State Office of the Secretary of State, is the office that handles incorporations. Your first act should be to contact them, ask for general information about incorporating, and then ask them to do a check on your proposed name in order to determine if someone else is already using it. Procedures for organizing a corporation are usually determined by state law. There are rules about electing a director, meetings, choosing a treasurer, appropriating money, procedures, etc. What you need at this point is a corporate kit, which you can buy at most stationery stores and printing shops for about $40 to $50. This should advise you on how to proceed. All states allow professionals such as lawyers, doctors, dentists, architects, accountants, etc. the option to incorporate if they want to. Incorporation, however, would not remove them from personal responsibility and negligence in the practice of their professions. Incorporating a professional's business can get complicated with lots of paperwork and some disadvantages, so you might consider getting professional legal help before you proceed. When to incorporate. If you, as owner, want to enjoy tax-free fringe benefits like the other employees. If you're trying to build working capital in the business. When you want to save money since part of income will be taxed at corporate rates rather than personal rates. When you want to give income to family members like business property, you can give it at low tax rates and the business can then lease it back from them and everybody wins if it's a corporation. When not to incorporate. If husband and wife work together, consider a proprietorship instead. If you want to take money out of a profitable business, you're limited in a corporation by what's called reasonable compensation. If you expect business losses during the early years, you can offset them with other personal income if you're in a proprietorship but not for a corporation. In general, the procedure to incorporate a business in your state is to firstly go to sba.gov for general information and assistance, then go to the Secretary of State to get your application forms and general information. Check out the availability of your business name with the Secretary of State in each state in which you plan to do business. For a fee, a law firm can both check and reserve your business name for you. Most states require that you indicate that you are a corporation in the wording of your corporate name with the word corporation in it. Prepare and file articles of incorporation. Hire an accountant to determine how much capital the business will need, what percentage will be debt versus equity capital, how much of the capital you will provide yourself and how much you will try to get from other investors or lenders. Work with an attorney to prepare the articles of incorporation as required by your state office of corporations. Fill out the filing documents. Pay the filing fees and submit the filing documents. Set up a board of directors. In the end, the term the limited liability protection is the big advantage that incorporation offers. It means that as an investor, you cannot be held liable for losses beyond whatever you have invested in the corporation. If your company is sued, they cannot go after your personal assets as well unless you did something illegal. Governing board/corporate board. Governing/corporate boards are the group of people in charge who manage large commercial corporations and non-profit organizations. They run the company from the boardroom for the owners, who could be one person, a few people or a large number of shareholders. They take their orders from the owners and translate them into company performance. They make the big decisions and decide where the money will go. As individuals, they should all be sensible people with their own viewpoints, strong enough to express them to the board. The board can be made up of anyone. The usual players are the owners, major shareholders, managers, an accountant, tax expert, lawyer, insurance person, public relations person, but they should go beyond this to include managers and employees from the company as well as major suppliers and major customers. If your board is stacked with major shareholders and people like this, their interest will always be the bottom line at the expense of a long-term vision and good business sense from the point of view of community and ethical values. One guy advises that all board members own some company stock because this ensures that they will be looking out for their own self-interest, but put a clause in saying they cannot sell that stock until they retire from the board. This will ensure that they will be looking for the long-term good of the company rather than just be another example of Chainsaw Al who seek to take the money on short-term gains and run. The board should be a team operating for the noble purpose of creating a great product or service for the betterment of humanity and to turn a profit, of course. Most of these people have a vested interest in the corporation by virtue of receiving a paycheck from it and being shareholders. They're supposed to work as a team, although sometimes alliances may form when people have differing visions as to the direction of the company. The board must be the top independent authority of the company. They can't simply rubber stamp what the CEO says or allow themselves to be bullied by him. They pay his paycheck. They can fire him. They, as a collective group of wise people, must make independent decisions based on fact-gathering, analysis, and discussion. They set the standard for the company and the standard for how the CEO will run the company. They have to put clear guidelines into place as to what the CEO can or can't do and enforce them with some kind of accountability system. This is the only way to keep a CEO from doing what he wants and possibly trashing a company. The board should make the CEO come in monthly or so and explain what's going on, a monthly report so to speak. They should also have their own monitoring system in place where they can inspect any office or audit any books anytime they want. The problem with boards is accountability. They are like the fat cats in the back room calling all the shots, and if they're dishonest as a group and looking out just for themselves as opposed to following some standards of accountability to their employees, shareholders, customers, and the common good, then it can all go to hell, as we've seen with Enron and a number of other companies. The members of the board do not run the company day by day. That's left for the managers and their boss, the CEO, who often is the only one with a seat on the board directly in the day-to-day operations of a company. In order for a company to thrive, there has to be some input from the managers beyond just the CEO. Simply appoint a manager or two to the board, and while you're at it, appoint a worker rep or two to the board as well. If a board is too off in the ivory tower and sets policy that the managers and workers can't relate to, the company will suffer. There are at least two major forces in a corporation: the chief executive officer/CEO and the corporate board. The chairman of the board, who is a member of the board, is also the direct intermediary with the CEO, so he's playing a middleman role between the two of them. The CEO should never also be the chairman of the board. Think of them as two different forces, ultimately united for the same cause, the betterment of the company. But if one guy is running both, it sets the stage for absolute power, which equals corruption and no accountability. So, as long as they're distinct, they can be watchdogs of one another. Ideally, all three work together, but in real life, there is politics and a difference of opinions as to the direction of the company. So managing any company with several sources of power is a wheeler-dealer's game. The board is always boss. The CEO takes his orders from them. He is their servant as to the leadership of the corporation. Do not think of the board as the higher level managers of a corporation. They are not supposed to be. They are the governors. They make the decisions as to the direction of the company, which is why they are called governing boards. The CEO is the top servant. Just like the government has civil servants to carry out the decisions they make, so too is this the way a corporation should operate. The managers do what the board says. They should be separate, distinct entities, but they shouldn't be opposing one another. There should be strong people in both sectors, each doing the job they're paid for, governing and managing. Governing is not managing. The governing board should not be merely content with managing the corporation and rubber stamping the requests and orders that come from their administrators, the managers of the company. They are not advisors. They are the top word, the bottom line. They need that power as the wise philosopher kings of the corporation. Plato wrote The Republic 2,500 years ago, where he said the people who should rule anywhere should be the wisest in the land, with a sense of duty and integrity and the strength of discipline to carry it through. They should be men and women of vision who try to move the company forward rather than just manage it or maintain the status quo. They are people of independent ideas, willing to speak up and dissent from the majority if they don't feel right about it, but they aren't just mouthpieces impressed with themselves. They have enough humility to listen to others and accept their ideas if need be. Good board members are ultimately team players who know That most things don't get done without compromise. They are people who can get along and make deals with others for the overall good of the company over their own egos. This is what you want for your board, philosopher. Kings not just money-hungry, low-level capitalist profiteers. The board doesn't just react to what happens in the company. They set policy for where the company will go vision-wise. The chairman is not a pawn of the CEO or the board. He is the member of the board who administers the meetings and is supposed to have the sense to lead them in dealings with the management team led by the CEO. He is not superior to the members of his board but yields more power and hopefully has more wisdom than the others on the board in order to be the head honcho. He has only one vote like them. But as far as symbolic and administrative power go, he's the man. A good board should be part visionary and part pragmatic, analyze everything, discuss it thoroughly to set their direction in both a profitable and ethical matter that will do good for their owners, customers, and employees. They have to be the wise men of an organization. They can't just make decisions based on profit alone or short-term gain at the expense of other factors. Wise people consider all the different facts before analyzing them and making decisions. They have ethical standards of accountability to the common good and to the spirit of what is right, all the while living in the real world of practical reality. Oftentimes, everybody has one vote only, even the owner or the CEO, so the board can elect to fire the owner should they think he or she is not going in the right direction. If you get big enough to hire a board, try to put a clause in there saying you as the owner can't be fired. The owner or CEO is sometimes given the power of veto in certain circumstances, but if they want to get rid of you, you can't stop the flow of the majority in a corporate bid to oust the head man. The best way to make your board of directors successful is to have good people and committees in place. Be specific about what you expect from people. That said, let's move on to the positive aspects of a governing board in a corporation. Think of a governing board as a superhuman being, a team, doing all the jobs the top man in a corporation would normally do. Instead of one man, there are a number of voices, each with a slightly different expertise who all come together united in the common bond of making this company profitable, working together to set a course that will make it prosperous for many years to come. Just like the ancient Greeks believed that the dialectic, talking things out, was the pathway to truth, so too do modern-day governing boards use the same concept, to talk things through to come to their version of truth in making the organization as good as it can be. The head managing person of the organization is usually called the CEO, Chief Executive Officer. Somebody else is appointed to head the governing board called the chairman/chairperson of the board. Then there's the secretary who handles the paperwork and the treasurer who handles the money. Everybody else are called either board members, staff members, or trustees. The chairman's job is to create enthusiasm and unity among a group of diverse people such that they feel free to talk openly and exchange ideas, such that they come to the best decisions for the organization. He should be a positive person, a kind of wheeler, dealer, a leader, and generally a happy, upbeat person to keep the spirit of the organization positive, smooth-flowing, and visionary all the time. Board members are either selected by those already on the board, elected by either the board or interested groups like the stockholders, or appointed by the CEO. The best boards are those with a diverse following, to get as many different viewpoints as possible, not just the views of white, middle-aged shareholders. It's good to have women and minorities to get different ideas that could take the company into new uncharted directions. The bottom line is diversity and teamwork, not just a group of like-minded people. Within the board itself, some people are close friends and allies, some are allied to one viewpoint, others to another viewpoint, and virtually all of them work with each other on some committee within the board if they stay in the organization long enough. It's wise to mix the people up on committees and have relaxed social functions so they can get to know one another on a personal level so that they work better together. Even though rivalries may exist, board members should be mature enough to know that the best interests of the organization is the bottom line, so they should have the sense to know that sometimes compromise is the best way to deal with a situation and not strive for a one-sided victory at the cost of alienating other members. When dealing with a diverse group of people, it's always about compromise, which is why boards are good. They force people to listen to other viewpoints. They're the nearest thing we got to the democratic running of a company, which beats the one man or few conservative white guys running the whole show. Just like in political circles, the older, more experienced members typically take the newer, younger members in and mentor them to learn the ropes. Every board typically has a constitution and by laws of conduct and operation, a standard operating procedure. Experts say that a size of 5/15 is enough to make it a deliberative unit where every person can speak his or her mind and they can come to a mutual consent as a group. If it's too big, it will often split into an in crowd and an out crowd, and the in crowd will hold all the power and make all the decisions by virtue of their alliance holding the majority of votes. There should be an uneven number on the board to avoid the possibility of ties in the voting process. There are standing committees, permanent committees which constantly address certain issues like public relations, expansion, etc., special committees to deal with projects and problems, and coordinative committees, generally the executive committee made up of the in-crowd who decide on the general direction of the company as well as emergency matters. In essence, the purpose of a corporate board is to run a good company, make money, have a good long-range vision, take care of employees, manage employee relations, be ethical and legal, and have some kind of social ecological conscience. If a board doesn't seem to be working, you might have to shuffle some of the people around, get rid of the bad seeds, elect a new chairman and bring some fresh new talent in. Governing boards, corporate boards, and boards of directors websites. Books about governing boards, corporate boards, and boards of directors are at number 658.422 or HD 2741-45 at the library. allbusiness.com. Answers.com/topic/board-of-directors. Answers.com/topic/board-of-directors. authenticityconsulting.com/bd_gday/bd_pubs.htm, field guide to developing and operating your nonprofit board of directors. boardmember.com. boardmember.com, magazine for directors and executive officers serving on boards of publicly traded companies. carolineoliver.com. carvergovernance.com. carvergovernance.com. catalyst.org/services/cbs/welcome.html, corporate board services. conference-board.org. contracts.onecli.com/exec-board, sample contracts. deltnnium.com/board-governance, board of directors seminar. directorsandboards.com. directorsdesk.com. en.wikipedia.org/wiki/board_of_directors. en.wikipedia.org/wiki/staggered_board_of_directors. hcmarketplace.com/prod-2707.html, Your governing board is responsible for corporate compliance. investopedia.com/terms/b/board-of-directors.asp. ir.hyperion.com/directors.cfm, Hyperion Interactive Reporting, User-Directed Board of Directors. Customers and Market Leadership. managementhelp.org/boards/boards.htm. mapnp.org/library/boards/boards.htm, covers non-profit boards. mapnp.org/library/boards/brdrspon.htm, non-profit boards. meva.com/governance/conduct.cfm. parleyassociation.com, consultants. partnerup.com, freepayrtnerup.com, get involved on a board of a company, join board of directors/board of advisors. policygovernance.com. sec.gov/rules. shareholder.com/governance.cfm. shareholder.com/governance/guidelines.cfm. sdpt.usf.edu/sax review/core_requirements/governing_board.htm. JAWCE Base Books. 989, Market St. SF California, 94103-1741. 888-378-2537. 415-433-1767. Fax, 800-605-2665. JAWCEbase.com. Books about governing boards. Association of Governing Boards of Universities and Colleges. 1 DuPont Circle, Washington, D.C. 20036. National Association of Corporate Directors. 1707 L. St. N.W. Washington, D.C. 20036. National Center for Nonprofit Boards. 1225 19th St. Northwest. Number 340. Washington, D.C. 20036. 202-452-6262. National School Board Association. 1680 Duke St. Alexandria, Virginia 22314. Corporate boards of some companies. Every publicly traded company has to publicly name their corporate board, list their minutes and what they do. You can easily find most boards on corporate for-profit and non-profit websites. Here are just a few to get a feel for corporate boards. apache.org/foundation/board/comma software. balder.com/investors/corp_gov_guide.asp. dell.com/content/topics/global.aspx/corp/directors/us/en/index. ge.com/en/company/company-info/executive bios/board_of_directors.htm. ibm.com/investors/corp-governance/cgbod.phdml. iccsafe.org/news/about/bod.html. inma.org/about_board.cfm. iri.org/board.asp. jupitermedia.com/corporate/governance.html. manulife.com/corporate/corporate2.nsf/public/board.html. opentext.com/corporate/r_leadership.html. upassociation.org/about_upa/leadership/board_of_directors.html. duralkali.com/en/governance/governing_bodies. Chapter 3. Types of corporations. Close corporations. A corporation with 10 or less stockholders is called a close corporation. Because of so few owners, when such a corporation borrows money, the corporate officers and/or the stockholders are required to guarantee the loans with personal assets. A guarantee means that the individual or individuals assume responsibility for all of the loans guaranteed, which means they will have to pay the loan back with personal assets if need be. The reason for this is that a corporation with such few owners has no board of directors or other watchdogs looking over their shoulders. This is not a strict legal rule, but most banks follow this rule of thumb when offering a loan to a close corporation. Personal name corporation/loan-out corporation. Many people who sell something or offer a service set themselves up as a corporation in their own name. They do this for both general business reasons, to keep all their business affairs here away from their personal affairs, and for the limited liability protection a corporation offers an individual in business. A lot of entertainers use what are called loan-out corporations, corporations formed by themselves which employ their services as their commodity. These corporations loan the entertainer's services out to other companies for a fee. There are several advantages to doing business this way. The use of a corporation limits the shareholders' personal liability for debts. The corporation can make tax-deductible retirement contributions. Money can be shuffled more easily for tax purposes. It eliminates the deduction on unreimbursed employee business expenses. There are some costs in setting up a corporation, but overall the benefits are worth it. It's better than operating than a sole proprietorship, especially if you are making lots of money. The loan-out corporation is responsible for the taxes and deductions for its one employee. Fill out IRS Form 1099 at the end of the year for tax purposes. S Corporation. The C and S designations are subchapters in the Internal Revenue Code. They are different types of corporations for tax purposes. Every corporation is automatically treated as a subchapter C unless the shareholders unanimously elect to be a subchapter S corporation. A C corporation can have different classes of shareholders, as many shareholders as they want, and different classes or types of stock. An S corporation, on the other hand, has limits. They can only have a maximum of 75 shareholders and only one class of stock, called common voting stock. There are a variety of tax planning options available with a C corporation that are not available with an S corporation. An S corporation files a tax return, but the corporation itself doesn't pay taxes. The shareholders pay taxes on the net profits proportional to their respective percentage of ownership. Subchapter S Corporate Status, IRS 1371-1379, exists to permit a small business corporation to elect to have its income taxed to the shareholders as if the corporation were a partnership. An S corporation provides all the advantages of a corporation but, unlike a corporation, is treated for income tax purposes as a flow-through entity. Income is reported individually by the owners or stockholders on their personal income tax returns. The corporation itself is not taxed. Also, the owners may deduct the corporation's losses against other sources of income. If your business has less than 35 stockholders, the legally allowed limit, you may consider this option. There are many specific rules relating to S corporations, so do your research well. The purpose of an S corporation is to allow a small business corporation to treat its net income as though it were a partnership. By doing this, you overcome the double tax feature of taxing both corporate income and shareholder dividends. Another positive feature of an S corporation is that it allows the shareholders to offset business losses incurred within the corporation on their personal income taxes. Only what are called closely held corporations with 35 or fewer shareholders can form the S corporation option. All shareholders must consent to it, and only one class of stock is allowed. Think of it as a hybrid corporation whose tax situation is treated like a partnership. In a regular corporation, the net income is taxed before dividends are paid to the shareholders, while the S corporation is treated as a partnership with the gains and losses taxed only in the stockholders' tax returns. In all other aspects, the S corporation is treated as any other corporation. An S corporation must meet 4 criteria to qualify. The corporation has no more than 35 shareholders, all of whom are individuals or estates. That there be no non-resident alien shareholders. That there be only one class of outstanding stock. That a specified portion of the corporation's receipts be derived from actual business activity rather than passive investments. Shareholders can claim business losses on their income tax returns. They report them on Schedule E, page 2, Income or Loss. From partnerships and S corporations on the Form 1040. The corporation files an annual informational return, Form 1120s and Schedule K1. The big advantage is that shareholders get the liability protections of incorporation but don't have to pay the double taxation of corporate profits that C corporations have to. At one time, the S corporation was popular but has now fallen out of favor in favor of the limited liability company. For taxation purposes, most corporations are Chapter C corporations which pay federal and state taxes based on their profits, and all payroll taxes must be paid directly. Losses can be carried on as a tax offset to future profits. The advantages of an S corporation over a C corporation is that the corporate federal taxation process is eliminated. The tax is passed on to the individual shareholders who pay the tax on their individual tax returns. With S corporations, the liability protection could be dropped when being sued for liability if a court deems that the S corporation is being run like a sole proprietorship rather than a true corporation. If there is only one major stockholder and no board, the court may rule that it's more sole proprietorship than S corporation, therefore allow your personal assets to be included as acceptable property in the lawsuit. S forms of incorporation are not recognized in all states. Professional corporation. A professional corporation is a corporation set up for business by people like doctors, lawyers, dentists, architects, etc. It is a distinct entity in some states, whereas in others, these professionals incorporate as regular corporations. The advantages are that you as an individual are legally protected from malpractice lawsuits and corporate debts, and you can set up your own corporate pension plan. A lot of professionals in business still operate as general partnerships. Changing their business status to either a professional corporation, regular corporation, or a limited liability partnerships is much better for liability protection. Even if you operate as a general partnership with other professionals, you can still incorporate just you as a professional corporation and operate within the general partnership. Chapter 4. Corporate Issues. Domestic vs. Foreign. Some corporations, particularly larger ones, sometimes file for incorporation in a state other than the one they're headquartered to get certain benefits particular to that state. This may not be a good idea for smaller corporations and could backfire because your home state may require that you qualify as a foreign corporation and you might end up having to pay taxes in 2 states. Get a copy of Inc. magazine and check out the ads for incorporating companies. When forming a corporation, you must decide whether it will be domestic, formed in the state in which the business is operating; foreign, formed in another state. In most cases, the domestic corporation is the best option. For a foreign corporation, there is an extra registration fee and you must hire a registered agent as the corporate representative in the state in which the foreign corporation is formed. The majority of small and medium-sized businesses, especially those whose trade is local in nature, obtain their charter domestically from the state in which the greatest part of their business is conducted. Out-of-state or foreign incorporation often results in the additional payments of taxes and fees in another jurisdiction. Moreover, under the laws of many states, the property of a foreign corporation is subject to less favorable treatment, especially in the area of attachment of corporate assets. On the other hand, there could be benefits from incorporation in another state. Compare the 2 states in terms or corporate rules, state taxes, etc., and pick the best. If you're a foreign corporation, some states require you to get a special certificate to do business in their state, whereas if you're a domestic corporation, you don't need this extra licensing protocol. If you want lenient simple rules for incorporating, set yourself up as a foreign corporation in a state like Delaware or Nevada, which are currently the most popular places to incorporate. Many states require 3 directors in order to incorporate, but some require only 1, so if you want to keep it simple and control the power as the only director, you could pick one of the following one director requirement states: California, Colorado, Delaware, Idaho, Iowa, Kansas, Michigan, Mississippi, New Hampshire, Oklahoma, Oregon, Pennsylvania, South Carolina, Virginia, Washington, West Virginia. Corporate name. In choosing a corporate name, the state corporation office will probably have rules about it, so read their rules over and follow them. The corporation can't be unintentionally or deceptively similar to another business name, so you might have to publish an ad in a major state newspaper stating your intent to use a certain company name, and if anyone has any objections, to bring them up now. The name can't be deceptive. You can't use a word in it that is not consistent with your stated purpose. If you sell medical supplies, you can't put the word computer in your company name. There might be certain words you have to put in the name, like corporation or Inc. And certain words you can't put in the name, like company, bank, or trust. Do not use forbidden words. Do not pick a name too similar to another corporation's name. For example, there's Microsoft. If you come along and pick a name like Microsoft or Microshaft, people might think it's affiliated with Microsoft. Pick the simplest name you can that says something about what it is exactly that you do. For example, you assemble furniture makes more sense to me than a meaningless word like IKEA. You need to check to see if anyone else is using the name or a similar name either locally or nationally, and if it's trademarked. usbeta.gov/tmdb/index. This research could save you a lot of headaches down the road if you are slapped with a lawsuit and forced to change your name. Check internet telephone directories like switchboard.com and business directories like hoovers.com or corporateinformation.com. Check website names at domainname.com. Check the website of the state corporation office in the state in which your corporation will be registered to see if the name is available. Registering a corporate name in one state without getting a federal trademark on it leaves it open to someone else in another state both registering the name with their state corporation office and getting a federal trademark for it. Articles of Incorporation/bylaws. When applying for state corporation status, probably the main document that you will file with the state agency will be the Articles of Incorporation, also called the Certificate of Incorporation, Articles of Association, or the Charter. Both the states and the IRS each have a different Articles of Incorporation form. Get a copy of each of these forms and tailor your Articles of Incorporation to meet both their criteria. There are both the Articles of Incorporation and bylaws, which will have to be stated with the application form. Some of the basic Articles of Incorporation and bylaws for virtually every state are as follows. Corporate name. Address of the corporation. Purpose of the corporation. Number of directors, defined by your bylaws. How the directors and officers are elected or appointed. Different classes of directors, if applicable, such as one higher class of insiders with more privileges than the others. Number of the directors constituting the initial board of directors and their names and addresses. Period of duration, intended life of the corporation, limited term lifespan or perpetual. Provisions for the regulation of the internal affairs including final liquidation. Provisions regarding disbursement of assets at liquidation. Private inurement and lobbying, required by the IRS. The name of the registered agent/statutory agent and the address of the registered office. Members or no members. Name and address of the incorporator of the corporation. Additional requirements. Bylaws are the document which gives a detailed account of the corporation's purpose, its operating rules and structure. If you decide to have members, this section will be part of your bylaws. You will have to file annual reports in some states but not all. Corporate kit and seal. A corporate kit is used to house all the important documents that your corporation will generate. All kits have a corporate seal which you need to emboss your company's name. Official documents. The attorney who sets up the corporation will often provide the kit and seal, or you can buy them at stores or online. Some facets of a corporate kit are as follows. The original state letter approving the corporation. Minutes of all meetings. List of members. Legal documents. The corporate kit is usually housed in a ring binder. You will also need a corporate seal. Most corporate kits have them, but if they don't, the local printing shop or office supply store will probably sell you one. Every corporation gets a specially made, unique corporate seal. Most corporations use a metal seal to emboss the paper. Some states allow rubber stamps for corporate seals, which can also be ordered from office supply and printing stores. The corporate seal typically contains the name of the corporation, the word seal, and the year of incorporation. You can buy corporate kits at stationery stores or by mail order from the following: free2incorporate.com/corporate_kit_contents.htm, what's in a corporate kit. attorneyscorpservice.com. bizfilings.com/products/corpkitseal.asp. bloomberg.com/corporate/outfits.html. corpexnet.com. corpkit.com. corpkit4less.com. corporate.com. corporatekit.com. corporatekits.com. corporatekitsupply.com. corporatepublishingcompany.com. corpisa.net. delawareintercorp.com/kit.htm. dwightjackson.com. en.wikipedia.org/wiki/corporate_kits. fastkit.com. form-corp.com/corp_kit.php. fredlake.com/corporate-kit.html. getincturenow.com/services/corporate-llc-kit.htm. inkparadise.com. minutebook.com, creating corporate minute books. mycorporation.com. nevadainkparadise.com/text/corporate-kits.htm. nsc.org/ehc/radon/corpkit.htm. thecorporatekit.com. Ace Corporate Seal and Stamp Co. 54 Northwest 11th Street, Miami, FL 33136, 9978. 305-358-2571. 800-433-2571. Corpex. 1440 5th Avenue, Bayshore, New York 11706. 800-221-8181. 631-968-0277. Midstate Legal Co., Inc. POG 2122. Orlando, Florida 32802. 407-299-8220. 800-327-9220. Security Agreement. If you incorporate as a company, you're free from personal liability as long as you don't do anything fraudulent, that is, you the individual is legally separate from the company. This is good for you. Now, to turn the tables so to speak, what do you do to get what you can for yourself if your company goes tits up? You make up a security agreement making yourself as the top creditor in the corporation for all the money and effort you pumped into it. You essentially put a lien on all the assets of the company that pay off to you should the company go bankrupt. I'm not an expert in corporate law, but these agreements are relatively common and generic, so if you want to protect yourself to get something back from the corporation should it go through hard times, see a lawyer about making one of these forms up. In general, some conditions will have to be met. If you have a bank loan, the bank will want itself listed as the top creditor, not you. You must show paperwork stating that you invested your own money in the company. You have your security agreement, make it available to anyone interested in the corporation's credit standing. Side benefits of incorporation. Beyond the tax advantages of incorporating, there are other benefits of incorporating. If you incorporate as a C corporation, even if you have only one employee, you can create a generous employee benefits package for yourself and your other employees who could be friends and family, and write it all off as a tax deduction business expense. The hook is that you can't provide special employee benefits for yourself and deny your employees. They have to be the same benefits for everybody. If you set up a medical reimbursement plan that covers everything including medical insurance, the cost of deductibles, dental treatment, glasses, etc., you can write this all off as part of a corporate employee benefits plan. You can also set up a plan for life insurance, disability insurance, long-term care insurance and other types of insurance. Some other expenses that the corporation can receive a tax deduction for are the business use of an automobile, education for business including travel to a business workshop/seminar, business use of your home, business travel, etc. If you take these deductions as a sole proprietor on Schedule C of your individual tax return, your tax savings won't be as good as if you did it as a corporation. Get credit by incorporating. Anybody in any state can incorporate themselves as a business even if they're not actively doing business in order to get credit through it, which is a separate file from your personal credit file, and in order to limit personal liability both credit-wise, the limited liability corporation gets the bills, and if you're sued by anybody. If you are the owner-manager of a small business, you may have been wondering about the advisability of incorporating your business, particularly if you are seeking equity capital. Laws governing the procedure for obtaining a corporate charter vary among states. Detailed information about the requirements of your state can be obtained from the Secretary of Corporations for your state. Books about incorporating a business are at number 346.71 OEKE 1400, KF 1420 at the library. If you want to incorporate your business, especially out of state for certain benefits, get a copy of Inc.com or Businessweek.com magazine and look in the business services section of the classified ads. Getting sued as a corporation. The power of a corporation lies in the fact that it is a separate legal entity different from the people who run it as far as the law is concerned. You control it, but as long as you follow the law, whatever happens to it legally cannot be blamed on you as an individual. So if the corporation is sued, the plaintiffs can go after everything the corporation owns, but they can't go after what the board of directors, shareholders, or members own. Legally, the corporation is treated as a separate person. It has rights, duties, and liabilities similar to those of a real person, but a corporation can think for itself. Its officers and directors do that, but because they do it behind the shield of the corporation, their legal liabilities are eliminated as long as they obey the laws and don't commit fraud. The officers act as the corporation. All decisions made by the corporation are documented in the form of minutes and / or corporate resolutions. In today's litigious society, think of your business, forming as a corporation as opposed to a sole proprietorship or partnership as putting a shield up over your personal assets like your house, car, and personal bank accounts and investments. If the corporation gets sued, the plaintiffs can go after the assets of the corporation only, unlike if you own a sole proprietorship where they can go after everything you own, including your house. As long as corporate officers and directors perform business as usual in a lawful way, they are protected from any personal liability in the corporation. When a corporation is sued, the corporate assets are at risk, but the personal assets of the shareholders are not. When you create a corporation, even if you are the only shareholder, you are legally a separate entity from the corporation provided you follow all the rules and do business above board. To maintain the separation between yourself as an individual and the corporation, you have to follow all the rules for running a corporation in your state. You must keep accurate records and not commit corporate and personal fraud in running the business. If you don't keep the two separate but run the corporation as an extension of you the person, this is called piercing the corporate veil. When you do this by not following the corporate rules of the state you are incorporated in, firstly, you risk losing your corporate status, and secondly, if you're sued, some smart lawyer will present evidence to the fact that you have pierced the corporate veil in the way you ran the company, and in addition to corporate assets, they will go after your house, your car, your personal bank accounts, etc. Chapter 5. Corporate Rules and Offices. Rules for incorporation by state. Every state has its own rules about incorporating a business, which you find out as you fill out their extensive application forms, many of which are downloadable from their websites. Chances are the application will be rejected once or twice until you get it right. They will have details about how to exactly fill out an application. Expect to pay a filing fee of between $50 to $200. You will have to sign the forms and might have to get them notarized. You will generally have to file in the county where your registered corporate office is. You will probably have to state the type of corporation it is as defined by the IRS, irs.gov, either a regular profit-centered corp. or a non-profit corp. Mutual benefit, public benefit, religious. liveabout.com/secretary-of-state-websites-12010005 lists Secretary of State Office websites for all U.S. states. Secretary of State offices register corporations, limited liability companies, LLCs, and partnerships. If you're looking for a job, go to your Secretary of State office to look for lists of companies in your state. sos.state.al.us commerce.state.ak.us/occ azsos.gov sosweb.state.ar.us sos.ca.gov sos.state.co.us sots.state.ct.us state.de.us/sos os.dc.gov dos.state.fl.us sos.state.ga.us guam.gov hawaii.gov/ltgov https://sos.idaho.gov/ cyberdriveillinois.com in.gov/sos sos.state.ia.us kssos.org sos.ky.gov sos.la.gov/pages/default.aspx state.me.us/sos sos.state.md.us state.ma.us/sec michigan.gov/sos state.mn.us/ebranch/sos sos.state.ms.us sos.mo.gov sos.mt.gov sos.ne.gov/dyindex.html https://nvsos.gov/ sos.nh.gov state.nj.us/state sos.state.nm.us https://dos.newyork.gov/ secstate.state.nc.us state.nd.us/sec state.oh.us/sos https://sos.ok.gov/ sos.state.or.us dos.state.pa.us/portal/server.pt/community/department_of_state/12405 estado.gobierno.pr state.ri.us scsos.com https://stos.gov/ state.tn.us/sos sos.state.tx.us https://utah.gov/governor/ sec.state.vt.us ltg.gov.vi https://commonwealth.virginia.gov/ secstate.wa.gov wvsos.com sos.state.wi.us soswy.state.wy.us sos.state.al.us Alabama Secretary of State 334-242-7200.commerce.state.ak.us Alaska Secretary of State 907-465-2530 Andazos.gov Arizona Secretary of State 602-542-3230 sosweb.state.ar.us Arkansas Secretary of State 501-682-1010 California Secretary of State, 916-653-3795 sos.state.co.us, Colorado Secretary of State, 303-894-2251 sots.state.ct.us, Connecticut Secretary of State, 203-566-3216 commonwealth.virginia.gov, Virginia Secretary of State, 804-371-9141. CyberdriveIllinois.com, Illinois Secretary of State, 217-782-7880. DOS.ny.gov, New York Secretary of State, 518-474-4752. DOS.state.fl.us, Florida Secretary of State, 904-488-9000. DOS.state.pa.us. Pennsylvania Secretary of State. Estado.gobierno.pr, Puerto Rico Secretary of State, 787-722-2121. Guam.gov, Guam Government Site. Hawaii.gov/ltgov, Hawaii Secretary of State, 808-586-2727. IN.gov/SOS, Indiana Secretary of State, 317-232-6576. KSSOS.org, Kansas Secretary of State, 913-296-2236. Michigan.gov/SOS. Michigan Secretary of State, 517-334-6206. NVSOS.gov, Nevada Secretary of State, 702-687-5203. OS.DC.gov, District of Columbia Secretary of State, 202-727-7278. SCSOS.com, South Carolina Secretary of State, 803-734-2158. SDSOS.gov, South Dakota Secretary of State, 605-773-4845. SEC.state.vt.us, Vermont Secretary of State, 802-828-2386. LTG.gov.vi, Virgin Islands Secretary of State, 340-776-8515. SECstate.state.nc.us, North Carolina Secretary of State, 919-733-4201. SECstate.wa.gov, Washington Secretary of State, 360-725-0377. SOS.idaho.gov, Idaho Secretary of State, 208-334-2300. SOS.ky.gov, Kentucky Secretary of State, 502-564-2848. SOS.la.gov. Louisiana Secretary of State, 504-925-4704. SOS.mo.gov, Missouri Secretary of State, 314-751-1310. SOS.mt.gov, Montana Secretary of State, 406-444-3665. SOS.ne.gov/dyindex.html. Nebraska Secretary of State, 402-471-4079. SOS.nh.gov, New Hampshire Secretary of State, 603-271-3242. SOS.ok.gov, Oklahoma Secretary of State, 405-521-3911. SOS.state.ga.us, Georgia Secretary of State, 404-656-2817. SOS.state.ia.us, Iowa Secretary of State, 515-281-5204. SOS.state.md.us, Maryland Secretary of State, 410-225-1330. sos.state.ms.us, Mississippi Secretary of State, 601-359-1333. sos.state.nm.us, New Mexico Secretary of State, 505-827-4508. sos.state.or.us, Oregon Secretary of State, 503-986-2200. sos.state.tx.us, Texas Secretary of State, 512-463-5555. state.de.us/sos. Delaware Secretary of State, 302-739-4111. state.ma.us/sec, Massachusetts Secretary of State, 617-727-9640. state.me.us/sos, Maine Secretary of State, 207-287-3676. state.mn.us/ebranch/sos, Minnesota Secretary of State, 612-296-2803. state.nd.us/sec, North Dakota Secretary of State, 701-328-4284. state.nj.us/state, New Jersey Secretary of State, 609-530-6400. state.oh.us/sos, Ohio Secretary of State, 614-466-3910. state.ri.us, Rhode Island Secretary of State, 401-277-2357. state.tn.us/sos, Tennessee Secretary of State, 615-741-2286. utah.gov/lt, Governor, Utah Secretary of State, 801-530-4849. wvsos.com, West Virginia Secretary of State, 304-558-8000. sos.state.wi.us, Wisconsin Secretary of State, 608-266-3590. soswy.state.wy.us, Wyoming Secretary of State, 307-777-7311. Chapter 6. Incorporation Websites. Incorporation Info Websites. allbusiness.com/business_advice/incorporation/index-31.html. en.wikipedia.org/wiki/incorporation_business. easylawdepot.com, corporate resolution or minutes forms. corpwatch.org. allaw.com/topics/business_corporate. acg.org, Association for Corporate Growth. corporateinformation.com. nas.org, National Association of Secretaries of State. sba.gov. smallbiz.com. smallbusinessnots.com. start-a-busines.com. corporate-law.widener.edu. law.uc.edu/ccl/sldtoc, Center for Corporate Law. nasdr.com/3220, State Securities Regulators. sec.gov, Securities and Exchange Commission. Incorporation websites. Legal books about incorporating a business are at number 346.71 or KE 1400, KF 1420 at the library. Business books are at number 338, number 658 and HD to HF. If you want to incorporate your business, especially out of state for certain benefits, get a copy of inc.com or businessweek.com magazine and look in the business services section of the classified ads. According to conventional wisdom, the best states to incorporate in for the minimal rules and regulations are Delaware, Nevada, nvinc.com/nservice11.htm, How to incorporate in Nevada, Nevada Secretary of State Corporate Information. Wyoming, bizfilings.com, has free articles describing incorporation. business.com/directory/law/practice_areas/corporation_law/incorporation_services 101incorporate.com. A1acorporateservices.net. activefilings.com. alecorp.com, 800-421-2661. alcoarfilings.com, incorporate online or form an LLC. amerilawyer.com, California Incorporation. automated-incorporating.com. bizfilings.com. bizfilings.com, 800-981-7183. bloomberg.com. bossoffice.com. business-incorporation-services.com. businessiworld.com. businessbronet.com. californiaincbiz.com. chqinc.com, 800-334-3808. clickaninc.com, St. Paul, MN. cogmap.com/home.php, organizational chart that. companiesinc.com. corpamerica.com. corpco.com, 800-318-7407. corpcreations.com, 800-672-9110. corpmakers.com, 800-267-7657. corpomax.com. corporate.com. corporate.com, 800-220-0457. corporatecreations.com. corporateservicecenter.com, 800 Nevada 0. corporateservicecenter.info. corporationcenter.ca, incorporate in Canada. dallas-dallas-attorney.com. delawareincbiz.com. directincorporation.com. documentfilings.com. easyas123.com/insidestory. easystepkits.com. e-incorporate.com, 800-423-2993. e-incorporationservices.com. elshaddai.com, nonprofit incorporation for missions, ministries, churches, Christian schools. enitia.com, California, Texas. executivesolutions.biz. executiveworldwide.com. easyarticles.com, incorporate, protect yourself and make money. florida-incorporation.com. form-a-corp.com. free2incorporate.com. gettingincorporated.com. gopublicienthius.com. iserpdocuments.com, 877-814-9333. inkfast.com, 888 Corp USA. inkfile.com. inc-it-now.com. inknow.com. inknow.com, 800-759-2248. incorplaw.com, Marina Del Rey, CA attorney offering national incorporation services. incorporate.com. incorporate.org. incorporate2000.com. incorporatebusinesstoday.com. incorporatefast.com. incorporatefast.com. incorporate-info.info. incorporateonsite.com. incorporatetime.com. incorporatingeou.com, 800-801-0625. incorporation.com. incorporationassistance.com. incorporation-center.com. incorporationchoice.com. incorporation.com, incorporation-help-incorporate.com, incorporation-information.net, incorporationmaster.com, incorpservices.com, inkparadise.com, instacorp.com, iwebwork.com/r-services/consulting/business-incorporation.html, juriscouncil.com, laughlinassociates.com, 800-648-0966, laughlinusa.com, lawmart.com, legalzoom.com, legalzoom.com, legalzoom.com/incorporate, llc.com, 800-942-6268, llc-business-incorporation.com, llcweb.com, maxfilings.com, mycorporation.com, 888-692-6771, mycorporation.com/incorporation.htm, myllc.com, mynewcompany.com, mynewventure.com, nationalbusinessinc.com, nchinc.com, 877 Gonveda, nevada123.com, Nevada LLC Online Incorporation, nevadafirst.com, nevadaincorporation.net, newbucenasnow.com, nalo.com, envyinc.com, paralegal-plus.com, Arizona, quick-inc.com, incorporate or form an LLC, quickmba.com/law/corporation, readycompanies.com, residentagenteinfo.com, San Diego Bucenas Law Firm.com, sbincorporationservices.com, self-counsel.com, incorporation forms, service.com/tcc, smallbizincorporator.com, start-a-business.com, startbizhere.com, states.nevadaincorporation.net, tcc5.com, go public with your company, thedelawarecompany.com, thedewberryfirm.com, theincorporators.com, incorporate in Delaware, thisbot.com/property/nonprofit-incorporation-texas.html, t-tlaw.com/incorporation.htm, val-u-corp.com, weincorporate.com, $50, wsr-corporation.com, wyomingcompany.com, Wyoming Incorporation, Inc., Magazine, 38 Commercial Wharf, Boston, Massachusetts 02110, 800-234-0999, 617-248-8000, inc.com.